I posted many videos featuring Larry Williams' strategies because he is the best trader. Also, the books that he wrote in the 80s have now more than 20 years of out of sample data. In his book of long-term secrets to short-term trading, he featured a strategy in chapter 4 called the volatility breakout. Now, this is not new. In fact, I did a video already on it using Strategy Quant X software, but I used only the daily bars because we used the previous close as the starting point. Today's video is about using this strategy intraday, so we are using the open today. Hello everyone, Ali Casey here from Static Oasis channel. Like I mentioned, Larry Williams wrote a book called Long-Term Secrets to Short-Term Trading. There are many strategies in that book that he go about showing you how he tested and the filters he added and so on and so forth. Today we will use the volatility breakout. It's very popular. There are a million variations on it, but I will use the plain vanilla by Larry Williams so we can see the out of sample, which is more than 20 years. So the concept is extremely simple. Now you can look at fundamentals, you can look at price expansion, but we can use a single bar range to define the entries for today's trading. So this is the concept for Larry Williams' daily range breakout. It's based on volatility. We will look at yesterday's bar, and that range, we can use a percentage of it to define the levels to enter today. So this is how we will do it. We will measure yesterday's range, and then we will add a percentage of this range to the open today. So this is an intraday strategy. Today's open, and we will add a percentage of that range to this open to go long, and we will deduct the same percentage or different percentage to go short. Now, why I say different percentage? Because if you are following me, then you know that I use different sets for long and different sets for short, because the markets behave differently in long and short, especially short-term trading. And that's what Larry Williams is doing. It's short-term trading. And for algo trading, usually that's what we are doing also. We are holding the trade for a short period of time. So definitely the S&P goes short a lot faster, a lot more volatile than going long. And so you should define that in your rules. So don't be afraid to put separate rules for short or for long. So here are the rules for the strategy. It's very simple. The input is a range percentage, so we can optimize this value to see what's the best range to enter. Let's look at the calculation. So we're calculating the long distance, which is the open plus the distance, and the short, which is the open minus the distance. And the distance is the range of data 2, this is the daily bar, times a multiple, which is the input. So we are defining the distance by using this formula. Once we define the distance, then we can buy next bar at long distance stop, or we can sell short. Now, why we have this variable here, trade allowed? This is to only allow one trade per day, because you can easily have multiple trades per day if you don't put this condition, which is not wrong. I mean, you can test it, and if it's valuable, it is good. I tested some of them. On some instrument, it is valuable. You can make more money, but on some of them is not. So we are going with the simple route today, which is only one trade per day. Now, in this case, the exit is the opposite. So I'm only entering and only exiting on the opposite side. So I'm doing this just to find out if there is an edge using this strategy. Here it's built on crude oil. So we have 404 trades from 2007 till today, averaging $188. This is really good because $30 should cover you both slippage and commission. So both of them are doing really well on oil, which we expect because crude oil is a breakout edge instrument. And this is on British pound futures, so we can see 81 trades, 82 trades split in the middle, 41 long, 41 shorts, but the difference is huge. So we can see that British pound has an edge in short breakout than in the long. And this is gold. We have 1603 trades, and the long is doing 130. The short is not as good. Remember, all these, there is no slippage and commission, so this definitely will lose money at the short side, but the long side will make money. So the point is that crude oil makes really good money long and short, British pound make good money short, and gold makes good money long. And that defines my philosophy. Not every strategy has to work exactly the same on all instruments. Not the same strategy has to work with the same logic on the opposite side, because short-term instruments behave differently, long and short, or mean reversion and breakout. So we will stick with the crude oil, and now I added an exit. So the exit basically is a stop loss and profit target. And I also put them as variables so we can optimize them. So everything is the same. We just have now a stop loss and profit target, and it's defined here. So currently we are making $76,000 with a huge drawdown of $80,000, and you can see it here. So it's almost between trade 25 until trade 350, we are doing nothing. Yes, we are making money, but the curve is crappy. And that's of course expected because we're always in the market. So the stop loss and the profit target now should make a difference. Also to remember, we have 404 trades, making on average 188. So let's compile the strategy. And now we have, of course, more trades as expected because there are stop loss, so you're exiting more so you can have more entries. Enjoying the content so far? That's amazing. Please make sure to subscribe, hit the notification bell so you don't miss any of the great content that I post on this channel. Also, it would be great if you can share the video with other traders so they can get the same value that you are getting. So we're still good on both long and short. But now if we look at the trade summary, we're making more money, and the drawdown is like extreme. So we went from 80,000 to 18,000. Of course, we can see that in the curve. But you can see now we still have a gap. So this is about 150, trade 150 to trade 500, that we are doing nothing. Yeah, so definitely we enhanced the curve a lot, but we still have a huge gap that we are doing nothing, which is totally okay if you're trading a portfolio. But we definitely can enhance the strategy by adding a simple filter. Now, we need to be careful about adding a filter because you can get crazy with the amount of filters you add to your strategy, and then it becomes an overfit strategy. You need to make sure that you're adding one filter that add a significant value to your strategy in one metric or more. So it could be on the drawdown, it could be on the number of trades, it could be on your total profits, and so on. So if the change is significant, then that filter is worth it. If it's not, then it's not worth it. At the end of the day, you're not trading a single strategy, you're trading a portfolio of strategies. So any strategy, literally, it's good if it's enhancing the portfolio. Even if in this case, it has a lot of gap that's doing nothing, but maybe adding this to a portfolio will enhance that portfolio a lot, and then you don't need even to add this filter. But we are focusing on this single strategy. So let's try a simple filter. So this is one of the best filters that I love, which is IBS. It's internal bar strength. This is it. It's extremely simple. It's measuring where the close happened within the bar. It's at the bottom, it's at the top, it's in the middle, and so on and so forth. And here I put a simple filter. It's like the RSI. Usually it's either 0.25 or 0.75, but of course you can also optimize this value. But I put here the same value as 0.25. So let's compile, and remember, we're trying to enhance this period while keeping, of course, the same profit and the same drawdown. And we want to enhance this period. And we did extremely well. So now we are growing constantly, and it looks like we lowered the drawdown also. And yes, we went from 18,000 to 9,000, and we also enhanced like $2,000. So this is what I mean, it's not significant. So if the enhancement was from 100,000 to 102, then that doesn't mean anything. Okay, but look at this. We went from 18,000 to 9,000. That's huge. That alone is huge. Even if I make less money, then I would take this because I'm making less drawdown. Also, psychologically, this is much better now because now I'm increasing my equity with a slope up curve. Now we can do an optimization and we can optimize all the figures. Let's see what we get. So we have 38,500 combinations. That doesn't matter. I will speed up the video. So top 10 results, they're all very close in terms of profit and drawdown. The number of trades, it's also very close. The average trade, also very close. So actually we can pick any of these and it will be okay. So the long filter is, looks like 0.5 is good. 0.345. So 2.5 is not the optimum one that I have. So definitely higher is better. And then for the short filter, lower is better. So 0.5. So this is what I have, 2.5, which is second best. And then 10, 0. So 0, that means there is no filter, because the strategy for the short filter is the IBS greater than value. So greater than 0, that means it's not working at all. And this is the fourth best value. So in this case, I will remove this filter from the short side. So 101, 10,000 drawdown, and 491 trades, averaging 208, which is excellent. And let's see, periodical analysis. This year is a monster year because, of course, the crude oil its volatility is spiking, which the same happened in 2008. Now, of course, there are many variations that you can add to this strategy. And in fact, I do go about this in the course, where you can build templates using this type of strategy to build other variations, because strategy quant X is really powerful in that, with adding as many filters as you like. Don't forget, if you have any questions, any comments, please post them below the video and I'll be more than happy to answer you. I do read and answer every single question sent to the channel. And if you want to take this further, be a part of my inner circle, you are more than welcome to join the Discord server through the link below, where I can answer questions deeply in video that you can go and look at it again. Also, you can download the code of strategies like these, and so on. As always, good luck with your trading, good luck with your investing, stay safe, and I'll see you soon.